Good morning. It's Tuesday, the 7th of January, and this is Govindraj Ethiraj, headquartered in broadcasting and streaming from Mumbai, India's financial capital. Our top stories and themes for the day. There is no take for today. The markets fall sharply as the sellers return and take charge. The Indian rupee hits another low, decoding India's foreign exchange strategy. Meal prices in the country are up, but unusually more for non-vegetarians. The HMPV virus has spooked the markets yesterday, and infectious diseases expert tells us what it really means.
This is the Core Report with Govindraj Ethiraj.
The markets take another dive. It does appear in retrospect and prospect that the sellers were on a New Year break and returned on Monday morning to hit the sell button. Both the BSE Sensex and NSE Nifty 50 ended the week's first trading session lower, almost 1% each, and more details shortly. HDFC Bank, the stock with the highest weightage on the Nifty 50, fell more than 2% after posting a sequential dip in its current and savings account deposits for the 3 months ended December 31st. State-run banks or public sector banks also dropped about 4%, led by a 7.5% fall in Union Bank of India after its total business and deposits dropped sequentially, according to Reuters, who also quoted a fund manager saying that early earnings updates, especially on the banking front, have been uninspiring. The bigger fear, of course, is that weak earnings may continue for longer and amongst more companies. Foreign portfolio investors are continuing to sell and have sold about $1.1 billion of local stocks and bonds in January on a net basis so far, according to stock depository data quoted and seen by Reuters. So earnings season now kicks off, and that is set to provide the direction for the markets, which of course is looking weak at this point, though arguably it is better valued. The season would start with IT services major Tata Consultancy Services or TCS reporting results on the 9th of January. Reuters also said that Dabur India, who we discussed yesterday, fell about 4% after its third quarter update signaled a likely earnings miss, and that was also the top percentage loser on the consumer index. Now, the Sensex and the Nifty, the 30 stock Sensex fell about 1,258 points to close at 77,964, and the NSE Nifty 50 was down 388 points at 23,616. Amongst the broader markets, who we also look at, the Nifty Small Cap 100 and the Nifty Mid Cap 100 were down by 2.7% and 3.2%. So that's higher or more steeper than the benchmark indices. If you were looking for a bright spot, here it is, and quite literally. Jeweler and watchmaker Titan said on Monday it was estimating a 24% rise in third quarter revenue thanks to strong festive demand in jewelry, according to Reuters. Titan gets about 87% of its total revenue from that business, that's jewelry, and had reported a 22% rise in third quarter revenue last year. So, sales of plain gold apparently rose about 24% for Titan, and gold coin sales were up 48%. Now, that obviously tells you that a lot of people are buying gold for investment and not just as jewelry. Rupee hits another lifetime low. So the Indian rupee fell to a fresh lifetime low on Monday thanks to an additional set of factors, including, of course, a consistently strong dollar and slowing capital inflows. The rupee weakened to 85 rupees 84 paise against the US dollar, going past its previous record of 85 rupees 80 paise hit in the last week of December, and then ended at 85 rupees 82 paise. All of this is from Reuters. Traders also told the news agency that it could have been worse were it not for the Reserve Bank's dollar selling intervention, and more on that coming up shortly. The dollar index was down 0.3% at 108.5 on Monday, which is lower from its 2-year high. Now, incoming President Donald Trump's inauguration on the 20th of January appears to be a turning point for several reasons across financial markets, and we will come to that shortly as well. So why is the rupee hitting consistently new lows right now? And more importantly, what lies ahead? I reached out to Anindya Banerjee, head of research for Forex and interest rates at Kotak Securities, and also asked him what India's or the Reserve Bank's overall strategy should be at this point of time in managing the rupee going forward.
Currently, rupee is facing a twin problem of outflows from the FPIs and also the global market uncertainty as the Trump administration is going to take office from end of Jan. So there is a threat of tariffs on China, which is negative for emerging markets. There is a lot of fund flow which is happening from various EM countries into the US financial markets. Plus, at the same time, we have the US Fed who seem to have cold feet as far as cutting interest rates further. So all of this has combined to push the rupee towards the 86 mark, almost there. But the pace has been slower than compared to other currencies because RBI has been in the market quite aggressively.
Right. And when you say pace has been slower compared to other currencies, is this a specific period that you're referring to, like in the last month or so, or is it the whole year, for example, 2024?
It's the whole year because 1-2 months you kind of have a bit of catching up, aberration, all those things. But when we take a 12-month period, then we see on both the counts. One, if we take the overall volatility, there is a high-low gyrations, and compare it with how the other currencies have done. Indian rupee is one of the least volatile pairs. I'm talking about the USD INR. And if you also consider the depreciation of the Indian rupee compared to the dollar and how other currencies have fared, we are a little better than the average. So on both accounts, Indian rupee has been a slow mover in spite of the uncertainties which have happened in the global markets.
Right. Anindya, in some of our conversations, including, I think, the most recent one a few months ago, you had actually predicted and projected that the rupee was going to depreciate and roughly to the levels that we are seeing today. So now let me ask you a more macro and strategic question. What should be the Reserve Bank's approach to the rupee at this point of time? Or rather, what should India's approach be given the overall competitiveness, export competitiveness, and all the other factors that go into where the currency should be?
Right. If we observe how RBI has changed its stance on the currency management, it becomes clear that what it used to do, let's say, before COVID, was basically take a directional bet, which means that they would most likely come into the market when there is some big moves, right? But right now, RBI has been curbing the volatility almost on a daily basis. Now, they ensure that they basically buy and sell almost every day in the market. And we are seeing that when we look at the RBI data which comes out on the intervention front, which comes out with a 2 month lag. So RBI is clearly saying that they are targeting volatility and not the rupee level, which makes sense because, see, in a complex economic system, you will have both importers, exporters, consumers. And each one of them will be either a beneficiary of a strong currency or weak currency. So it's very hard to say that on a net basis whether India will benefit from a weak rupee or will benefit from a strong rupee. So that's the reason why the central bank has decided, rather than trying to decide a particular level for the Indian rupee, they are trying to target volatility, because when volatility increases, it starts to impact everybody in the economy, right from the person who is trying to project his cost of capital, which he is borrowing abroad, or the cost of hedging, or any kind of business decision gets impacted. So when the volatility of the currency is very high, and plus the foreign investors, they start to demand a higher risk premium on their investments. So I think as far as the strategy is concerned, we will continue to expect RBI to curb volatility, but considering the global environment is looking quite challenging in 2025 with Trump and China, the volatility overall globally can be quite high, which means RBI has to be much more hands-on in the market.
Right. And you're obviously a bank. And as a bank, you're talking to a lot of companies and clients who are seeking your advice. And both on both sides, as you pointed out, they could be importers or they could be exporters. So what are you telling them right now?
What we generally tend to see in the market is that whenever the rupee comes out of very low volatility, which it has been for 2023 and 2024, 2 consecutive years, so then the hedging demand tends to come down. And also, if you look at the forward premium, because of the very low interest rate differential between the two countries, it's almost at a record low. So on one hand, a low forward premium is not an incentive enough for the exporter to come and hedge on the forwards or futures. At the same time, the low volatility is not frightening enough for the importer to come and hedge. So what is happening is the overall hedging has come down, and that's what we are seeing. But it is an idle time for the importers and exporters to take and hedge because the cost of hedging is low. But as of now, the hedging demand is low in the market, and it tends to pick up when volatility picks up.
Any other outlook for, I mean, I think all of 2025 is maybe asking for too much, but for the next few months, and do you feel things could change dramatically after Trump is sworn in on the 20th of January? Also, in a way, why is that such a turning point? Because a lot of what he is likely to do, at least as we know today, has already been revealed.
You're absolutely right. As far as the first few months of 25 is concerned, so let's say the last quarter of our financial year, Jan till March, that looks to be more of a quieter period because the market is more or less aware that Trump is going to act on tariffs, probably act on Iran initially. So America first is going to be the overall policy, but what there is lack of, or where there is lack of clarity, is to the extent into which he is willing to go. Because if we use term one as a reference point, then it looks like almost everything is priced in. But I don't think the term two is going to be like term one, because term one, the overall global economy, overall the US political backdrop was very different. And even Fed has become quite cautious at this time. We have seen from the commentary. So the first till March, the overall volatility can be low, but we have to see to what extent he is willing to go, basically pursue his policy of America first. Is he going to go for very high tariffs across the board, which can unsettle the entire global trade? We have to see.
Right. Thank you so much for joining me.
Thank you so much for having me.
Thali prices or full meal prices in India rise. The cost of a full meal in India has risen, though unusually more for non-vegetarian meals for the month of December compared to November. Year on year or compared to the previous year, prices are up sharply. Usually, it's vegetarian meals or vegetable thali prices that rise thanks to components like tomatoes, onions, and potatoes, among other vegetables. Meanwhile, increases in non-vegetarian thali cost was driven by an estimated 20% year-on-year increase in the price of broilers or chicken, which accounts for about 50% of a non-vegetarian thali cost. All of this is from CRISIL Market Intelligence, which tracks this via a roti rice rate tracker. Compared to November, the cost of non-vegetarian thalis also grew at about 11% thanks to that increase in broiler prices, further on a dip in production thanks to a cold wave in northern India. This, along with a rise in festive and wedding season demand, along with an elevated feed cost, increased prices of broilers. Now, the rise in vegetarian thalis were driven by an increase in tomatoes and potatoes, which collectively account for about 24% of the cost of a thali. Tomato prices were up 24% to 47 rupees per kg in December 24 from about 38 rupees per kg in December 23. This is obviously a good time to update ourselves on what prices ever were or are for these important vegetables, which can drive inflation levels up quite sharply. So potato prices were up 50%, though on a lower base last year, to about 36 rupees per kilogram in December 24. Also because of an estimated 6% year-on-year decline in production. And now, don't forget, as we've been referring to, there has been a 16% year-on-year jump in vegetable oil prices thanks to a hike in import duties and, of course, the higher demand during festive and wedding seasons. Now, vegetable oil prices have been traditionally low and trending lower because of low import duties and have actually helped in keeping overall food prices or food price inflation lower. So the good news is that month on month, as compared to November, the cost of a vegetarian thali declined 3% in December 24, and the cost of a non-vegetarian thali, all of which we've been referred to already, has increased at a similar pace. The only price that has fallen year on year, and about 11%, is the price of a cooking gas cylinder or liquefied petroleum gas cylinder, from about 903 in Delhi last year to about 803 this year. Or let me put it this way, from 2023 to 2024. This is a 14.2 kilogram cylinder. Wheat prices spike. Speaking of some rising prices, wheat prices have jumped to a record high on Monday thanks to falling supplies and robust demand from flour mills, which are apparently struggling to secure the grain to operate at full capacity, industry officials told Reuters. These record prices are likely to lift retail inflation, and obviously we would watch out for what the CRISIL roti rice tracker would look like in the coming month. Retail inflation had hit a 14-month high in the month of October. Wheat supplies are limited in the market. Even after paying record prices, flour mills are unable to secure enough to operate at full capacity, according to a flour miller who spoke to Reuters. Prices are around 33,000 rupees per metric ton in New Delhi. That's up from about 24,500 in April and far above the government's fixed minimum support price of 22,750 rupees for last season's crop, according to Reuters. A new virus hits the country. 5 years after the first case of COVID 19 was reported, another respiratory illness has wreaked havoc in China, according to some reports, which also suggest that the virus is not or nowhere in the same league as COVID 19 was. But the stock markets were definitely spooked, or that was one of the reasons that spooked them on Monday, as memories of COVID 19 and the shutdown that followed in 2020 came back to traders who were obviously active in that period. Meanwhile, India too has reported a handful of cases of human metapneumovirus, or HMPV, on Monday. Now, this is a virus that usually has symptoms similar to a cold and is quite common, and it affects people before they turn 5, which means children. It was first discovered in 2001 and belongs to what is known as the Pneumoviridae family, along with respiratory syncytial virus, or RSV. India's Indian Council of Medical Research, or ICMR, on Monday said that the virus has been in circulation globally, including in India, and serological studies have shown that it has existed in humans for more than 60 years and is distributed all over the world, according to reports. Health officials across the world have reiterated that there is no need to panic, as this is not a new pathogen. I reached out to Dr. Ishwar Gilada, infectious diseases expert and Secretary General of the People's Health Organization India and Governing Council member of the International AIDS Society Geneva, and I began by asking him about the significance of this virus and the likely impact, and more importantly, what precautions we should take to stay safe.
Basically, this HMPV is not a new virus. It is a quite old virus, maybe there in existence for 50 to 60 years. But first time detected in Netherlands in 2001. The significance is that currently it is widespread in China. And as soon as something happens in a big, very highly populous country, and secondly, from where the COVID came to the world, people get panic. So that panic is uncalled for. This HMPV virus is called human metapneumovirus. Human means human being. And it was earlier called A. A means avian. So AMPV, avian metapneumovirus. It came from either birds or pigs to human being, and it's stayed here. So if you look at the chronology of events in last 40 years, in all new infections, most of the infections are viral infections. And among them, almost 2/3 of them are zoonotic infections. Zoonotic means they arise in animals or birds and then come to human being. So the simple logic is that, like, we have a way of survival, and we would like to survive and do everything for our survival. Even they have a right to survive. We try to intrude their environment. We try to intrude in plants and animals and birds and everywhere, and we try to eat lot of things for our survival. Then these are the ways we are going to be suffering. So if a mosquito comes and bites you, you kill the mosquito. So same way, if you go and try to intrude their atmosphere and in their environment, and you try to kill them, they are going to take a revenge with you. And that's the reason that whatever infection you say, starting from HIV, Ebola, Zika, Nipah, SARS, mad cow disease, COVID, all these are zoonotic infections.
Right. The general feeling is that this virus can be tackled with existing cures, or is it not as serious to even, let's say, respond to?
See, this virus has no cure, and this virus has no vaccine. So even our flu vaccine, they do not prevent this virus. But this virus is quite a mild virus. So whenever, currently, we are not doing the test because the tests are very expensive. This was something called metaplex PCR. Metaplex PCR is you do multiplex PCR. That means you do multiple virus tests in one go. But that test is around 17 to 20,000. So whenever a patient comes in hospital and we suspect that there is a viral infection, we try to do influenza test because that is cheaper. But if you do multiplex PCR, maybe we can see RSV and this metaplex virus, metapneumonia virus in many people. So if generally you do a survey amongst 100 people infected, you'll find at least 5 to 10 people having this virus. But because currently there's a panic mode, and then we are having a surveillance of this virus, we are doing a specific test for this virus, and then we are finding 2 cases in Karnataka, 1 case in Gujarat, and you do everywhere you will find these cases. They are no link to China, they are no link to travel, they are no link to anything.
This seems to be affecting younger children more than others, or adults particularly.
This virus is known to affect mainly children below 1 year of age or sometimes below 2 years of age. And older people which are more than 65, or those people who have a compromised immunity. That can be because of steroid treatment, That can be because of some kidney transplant or organ transplant, uncontrolled diabetes, people with asthma, people with tuberculosis. They are likely to get this infection more commonly. And if they suffer more than other people who can get rid of it in just 4 or 5 days.
How would one know that one has contracted this HPMV? Assuming it's not dormant already, in which case nothing has happened. But if it's not dormant, what would be the symptoms and how should one respond?
You see, by and large, this is part of a very, very common viral infections. And most common are influenza A, influenza B, RSV, despite the sensitive virus, and Mycoplasma pneumoniae, and this one. So these are the chronology of that percentage wise, and COVID. So most of the people would have influenza B, which is very mild influenza. And by and large, in 3 to 4 days, they get away from it. They don't suffer at all. Similarly, they will not suffer from this virus for longer than 4 days. By the time your doctor comes to any conclusion that should we do this test, the patient is okay. Secondly, test being very expensive and not in common use, we are not doing it. But if government decides, if some labs decide that they can bring a special test for that, which is only single test rather than multiplex PCR, and the test is cheaper, like 1,000, 2,000 rupees, then we can do this test more often. But we do not do the test because, number one, there is no treatment. For influenza A, we have a treatment. We have antiviral infection, antiviral treatment for that. Number two, we have a vaccine for that. For here, neither there is a vaccine nor treatment. So what do you going to achieve by just diagnosing or labeling somebody that this person had 3 days fever and he has got HMPV virus? We don't achieve anything. That's the reason we have not been doing this test.
Right. So you're saying at this point, from what we know, there is no unknown beyond what you're saying, which is that we are not able to cure it. But even though we are not able to cure it, its impact is very limited.
Yeah, very limited impact. And this is a re-emerging infection. It's not a new infection, new virus at all.
And there's no unknown in this, as in something that we don't know that could happen and so on.
No. Only unknown is that we don't know the vaccine and we don't know the treatment. And therefore, our research should focus on those two things.
But yeah, either way, you're saying that the impact is limited. So even if there was to be a vaccine or a cure, it would only reduce that 3-day fever impact, as you were saying.
You're right.
Right. And last question, any precautions that in general one should take either at this time in general or because of this particular virus in specific?
You see, precautions are very simple and they are in our tradition. In Indian tradition, we say namaste. We don't hug. We don't shake hand. We wash hand after every activity. We come out, eat or drink, we wash hand. We change clothes when we come home and we have a different clothes. We don't have same clothes. So those precautions and sanitization, and if at all these infections spread, you mask. Mask for yourself, mask for your loved one, your friends, your office mates, your classmates. You mask. These are the only 3 precautions. There is no 4th precaution. And these are being hardly learned with a lot of hard training. We have educated people. Let us follow the same thing. There is no other precautions required. And the most important is, as soon as some new disease comes, we think that our immunity should be good. Why don't you do that 24/7, or why don't you do around the year? We don't do that. And COVID has not taught us any lesson in that sense. No people have stopped their smoking because smoker will have a high risk. They are not stopped. So I think we learn something, we give up something, but we by and large would like to say, no, हमारी immunity अच्छी, हमको कुछ होता ही नहीं. That is attitude.
Right. Dr. Gilada, thank you so much for speaking with me.
Thank you.
That was the Core Report with me, Govindraj Ethiraj. Do stay connected with more of our coverage at the Core. You can check out our website or sign up to our newsletter for our exclusive stories, one in-depth feature a day on www.thecore.in. Do also track us on LinkedIn, where we usually post synopses or extracts of our top stories and interviews. We would love your feedback on how we can make business more interesting and relevant, including, of course, India's vibrant manufacturing sector. So write to us at feedback@thecore.in. And thank you once again for listening.